Hey there, everybody. Thomas with Basecamp Trading here, and today I'm going to answer a question that I get a lot, which is how do you know when to time your hedges? So how do you decide when to put on a hedge? So I think I talked about this previously with looking at divergences on a weekly basis, and now's a good time to show this as an example because we have one going on in the S&P here. So we have the bearish divergence where we've gone to a higher high. And I want you to notice a couple things about this higher high. First off, on the rally last week, very low volume rally. And then this week so far, we're still decently low volume. Don't have a ton of volume. That means that it's only Thursday. However, we're not getting really any movement. So we broke through the previous highs here, and we can't really maintain it above those previous highs, and so far we're forming a bit of a doji. Now, one thing to keep in mind is it is quadruple witching tomorrow, so we could have a volatile day. Typically you get a ton of volume on quadruple witching, so watch for that. However, we do have the bearish divergence. So when we have this going on, we say, all right, we have a divergence. It's good to be careful. All right, but when does the divergence trigger? And then we go, okay, we're looking for a pullback, because just because you have a divergence doesn't mean it's always going to lead to a sell-off. Well, what we watch for are a couple different things. First off, a potential candlestick pattern that's signaling a reversal. So for example, if we close this week in a doji, then I'll say, okay, it's looking like a reversal doji. They ran the stops where it broke through the previous highs and couldn't stay above, pulled back down and closed below the previous pivot high. That would be a signal to start to hedge, and then it would trigger where we go full hedge as soon as we broke the previous weekly low. Once you break the previous weekly low, we then look for the retracement, and we would watch a couple things for targets on the downside. First off, we'd look for the trend line down here. That would be, so if it triggers next week, let's say, that trend line would be down around 37.67 if it does next week, or if it goes 2 weeks, it would be around 37.85 area. The second thing we look for be previous pivot lows. So we look for a move back down towards 37.10 3/4. Then we'd move from there to the pivot low before that, 36.46, and we take it one step at a time, moving support level to support level to support level. So one of the things we're going to be watching for here, A, weekly divergence, B, the fact that our rallies are losing steam. So we have low volume rallies, high volume sell-offs. All right, momentum is losing steam. Our downswings have picked up strength, so it's all saying, hey, careful here. And then we'll go and we will take it one step further, and we look for the weekly to trigger. And we can also drill down to like a 240-minute price chart, which is one of my favorite time frames to watch. And we'll look for the trend to change. So right now, we are actually trending up on the 240s in the S&P. We're higher high and higher low pivots, and have been for a while now. But if we break the previous pivot low, that's a big warning sign. Hey, trend is coming to an end potentially. And then the last thing we would look at, again, would be the break of the previous weekly low. So a lot of stuff to pay attention to. But this is how I time my hedges, and when I decide, okay, time to go hedged. Now, if our weekly trend changes, if we break through previous weekly pivot lows, then we go, okay, time to really be cautious, and we'll potentially be net short at that point. And that's when you can have the potential for a bigger sell-off, bigger correction. But keep in mind, even with the sell-off we had recently, this is just a drop in the bucket in the grand scheme of things. I mean, this isn't even anywhere close to the volatility that we had in October, September, October of last year, where we had several weeks straight down. All right, this is just a normal retracement. The reason it's hurt so much is a lot of people have large caps, and some of our mega cap stocks, our tech especially, if you look at the NASDAQ, really got hammered here. So keep an eye on it. It's good time to be careful. All right. I'm not running around screaming that the sky is falling or anything, though. It's just a good time to be careful. If we change trend on the 240s, we'll start our hedge. If we break down on 240s, we'll start our hedge. If we break the previous weekly low or close in a reversal doji, we'll start our hedge there. But that's it for today. And until next time, happy trading, everybody.